Hi everyone, welcome to Market Insight for the coming week of July 29th through August 2nd. Um, Lots to talk about today. We're going to start as we usually do with the monthly the monthly chart. We can see that the monthly bar here, the current monthly bar is down, and it's down on increased volume. And currently, we closed the market here on Friday at 54.99. Last June, a prior month, the market closed the month at 54.21. So we're currently about 20 points or so below last month's close. And this is reflecting the market struggle, right? That we're seeing this week. Buyers are having difficulty holding the recent high prices, right? And the sellers are pressing on the market. So now in the remainder of July, we only have 3 trading days left, Monday, Tuesday, and Wednesday. And we switch over to the new month. It's pretty unlikely the market's going to close, firm up over the next 3 days. We'll see, of course, but I'm just assuming that that's not going to happen. And we're seeing, a down month, and so the beginning potentially of a larger pullback, more of a monthly and weekly pullback than a daily pullback. Of course, that can take weeks, and days and weeks to unfold. So it's not something that thinking about, okay, tomorrow the market's going to go, running down really hard. No, not that at all. Just this is our larger context, that's all, and we're starting to see weakness come into the market. So we'll continue to watch the monthly, but a poor close this month, as I say, sets up the expectation for more downside in the coming days and weeks. Okay, let's get to the daily chart. Excuse me. Here we see the second down week in a row. Oh my goodness, right? We haven't had many down weeks in 2024, let alone 2 in a row. So we saw, there was one in April where there were a couple of down weeks, and then the market, started right back up again. That was last April, I think. I'm sorry, that was whatever that was in here, not April, but in June, I should say. In April, however, we did get 3 weeks in a row, 1, 2, and 3 down weeks in a row. Note it was set up by that narrow range week ahead of it, right? Anyway, those 3 down weeks, because the market's been so bullish, that sparked the current rally that we see. So the weekly has good supports, including the demand line here since the April lows, and then the 55.02 level. Both of those got broken this past week, and all of that occurred on increased volume. So we do note there's some buying off the lows yesterday, but the weekly has the overall appearance of supply pressing on the market, doesn't it, right? Breaking support up in here, breaking support down below, trying to hold in here, and it may rally up in this area. But you can see there's quite a bit of negativity in the market, all right? So let's go into the daily here. Look at some of the details. And let's just look at the tape here. The daily tape remains bearish. We started this trend run down back here with the 2-bar top reversal on the pickup in volume. That was July 11th, right? And then the 2 days that followed that showed buyers trying to elevate the market, trying to bring back higher prices. You can see the volume was sustained there, but their effort was not to make, their effort results in making not new highs, but closing back down into the middle of these 2 price bar ranges, right? So that indicates effort to go up, right? But the effort that the buyers were putting out was insufficient to raise the prices because selling came in. So this is effort versus result on these 2 days. Then the next day, This is July 16th. We get an inside day or a near inside day, but a no demand day. Volume lighter than the prior 2 days. And then supply comes in on the 17th with increased volume. Right? And then the selling continues down the next day on the 18th. And then a couple of days, we attempt to rally. Notice the narrow range bar here at the top of the pullback into the pocket area, the 5630 pocket area, right? This was Tuesday. This was also an NR6 day. This is the trade station. I have it set up so that it does the paint bar function, which calculates these NR6 days. And this, of course, comes from Toby Crable. The narrowest range of the prior 6 days often will lead to, not always, but often leads to expansion. You can think of it in terms of volatility. Here we have 2 narrow range days in terms of volatility and price action, and bang, we have volatility expand the next. Narrow range, low volatility, volatility expands. Narrow range, low volatility, volatility expands. Here it doesn't really. Here it does, not quite, and then it does over a couple of days. So, you know, it's not perfect, but it's a good indication that when it comes into a resistance area or a support area, top of a trading range, often the market's vulnerable to a pullback at that point. And that's what we see here. We rally into resistance, we get that narrow range day. It's vulnerable to a pullback, and bang, we get supply come in. And those narrow range days are seen as important because if the volatility contracts then, and then the volatility expands with greater price action. That's why we watch those, because we're looking for that expansion in volatility, and we want to try to capture them. So that NR6 day sparks the Wednesday sell-off, starting with a gap down, right, and creating a large range down, breaking that 5502 level, that support level on a pickup in volume. And then Thursday, we have even more volume come in, but we also have shortening of the thrust, right? And indicating that buyers are attempting to hold prices here. This is where we started off the CPI back in around June 12th or so. That announcement that lit the market off and started the market up higher. We're back in that, we're kind of back testing that area, right? So that's why we're starting to see this. Prices holding in here and maybe setting up potentially for a rally. And we started to get a little bit of a rally on Friday, right? Though it's an inside day and didn't really light up the market too much. It did push the price back up near the range, near the top of the range of the prior day. So we'll talk about what's on tap. We'll come back to talking about what's likely for next week in a moment. I want to do that off of the 240-minute chart to give you a little more detail. But you can see right in here, we've got the broken weekly demand line, the daily supply line, the resistance in here. It's going to be some significant resistance it's trying to get over. Not to say it can't, but just be aware that that's what the market is confronting here. All right, let's take a look at the point and figure chart. Okay, let me get my bearings here so I can talk to you about this without getting lost and confused in my notes. Yeah, here we go. So we'll take a quick look at the point and figure chart. Here I'm using a very sensitive point and figure. This is the 20/1 point and figure off of the cash index. And we always use the cash for point and figure work. And the current count along the 5580 line, it looks like here, yeah, 5580 has 10 figures. And we would, so that's got a value of 200 points. We'd first take the count off of the high here, but we've already exceeded that level. And so we would take the subsequent count off of the 5580 line. And that brings us down to 5380, a projection down to 5380. So in other words, that's all the cause that's available in here. Not to say that we doesn't develop more cause. For example, the market could come back up into this area, hold in here, and we have, even larger cause for a bigger move to the downside. That's kind of how this stuff works. But right now, this is the only cause that exists, and it will be satisfied down here at 5380. So we're very close to that. Potentially ending action. If that were to occur, maybe we will get some more congestion in here, a buildup of cause for a new projection to the upside. We don't know that yet. All we can say is that there's not a whole lot of more cause in here for much more downside. We can get down to about 55.80, 55.75 maybe, but in terms of cause right now, that's about it in this market. That's what it looks like. So, and that's consistent with our structure on the daily chart. So let's go quickly to the major markets, and then we'll circle back around. Major markets, we see that the NASDAQ is the weaker. Suddenly, it's always amazing. We had the Dow was the weakest for quite some time, and here's the two other markets were making new all-time highs, and the Dow was lagging. And now, and the Nas was leading us on that, and now the NASDAQ is weaker with the Dow stronger. So it will likely be the NASDAQ that leads us lower if indeed the market does decide to go lower. So we'll be watching the NASDAQ and seeing how that all shapes out. All right, let's take a look. I do a little more detail than normal. See how you like this. And this is the 240-minute chart. And I like to keep just some, notes on the side here. And you can see some of my notes. Just first of all, before we get into the notes, you can just orienting us. This is the daily down trend line here, and we're coming down into the support. As I noted, this is the point where we had that CPI announcement back in mid-June. That was around 50, 54, 55, 56 area. We came into that, we got oversold. You can see how the market plummeted down in here, and we're seeing some buying coming in. Not stellar buying yet necessarily, but certainly some buying. So let's just think a little bit about what's likely for next week. The 55.42 level right here is probably the key at this point. We know it's got some resistance to it, right? And this is, we have a broken horizontal support line where we came down through it. Came down through it pretty hard as well. We just plummeted right through. So now this is going to be resistance here at 55.42. Not too far away, we also have this supply line coming down, and a little bit higher up, the weekly broken demand line. So this whole area in here is pretty good resistance potentially, right? So for buyers, if they're going to wrest control at this point and break out of this supply, this downtrend channel, they got to get over the top of 55.42, right? That's a key level for buyers. And sellers, we can already see the selling is starting to come in off of the 240-minute chart. When we approach the 55.42, look at what happens. We come back down and close the bar more towards the middle of the bar rather than the top of the bar. So that's the presence of selling. We'll see what happens on Monday. Can the buyers push over this first battle line area? Okay, so that's That's going to be important, and you can see the confluence in here. We're going to confront that on Monday, right around the 55.42 level. So that's the first battle line area, right? Now, if buyers can hold the lows and push prices up, close it up above 55.42, that's our first step up towards higher prices. But to really regain, in my judgment at this point, to really regain the advantage, they got to take out the high of Wednesday. I put that in here in sort of a pinkish or magenta, whatever what color that is. You know, this is where we saw the buyers unable to hold the support, and the sellers stepped in and come in really hard, right? They come in force. So this high is 55.85. And it kind of represents a 240-minute pocket area in here. You can see it, right? The pocket from the underside. When we approach from the underside, that's resistance, right? So this is going to be our line in the sand. And sellers will control below that. But once we can get above that, buyers are going to be more in control. Then above the 55.85, we've got the 56.30 level. This is another pocket level, resistance up here that turned the market down earlier this week. So that's an important level too. Getting up above that, then maybe we can think about higher prices. But you can see all the resistance levels up there at the start. Now, if we do start to rally this week and we get up into here and we hold this level, say, notice that we will have had a larger, you know, we start holding in here for the rest of the week. Notice that we will have had not only breaking the, you know, supply line and the resistance that we've been talking about in this video segment, but also we'll have a larger wave up, right? And we'll contribute to the bullish story if that happens. And that's an if, right? It has to be. I'm not predicting it. I'm suggesting that this is what we want to look for. We want to watch out for. All right, now, if the market is unable to hold the 55.33 low here, 55.30, 50, what are we at here? 54.33, that's got to be wrong here. Right, yeah, this is 50, hang on a second. I must have mislabeled. That's why I was looking at this and thinking, what does this say here? Got to be wrong. So I think the lows in here are 54.33 and change. So that's our low here from that was put in this week. So we can spend time building out, right, trading range in here and then break out higher or lower. If we break, you know, we can spend a couple of days in here doing that. If we break 54.33, if we start going down after a day or two more soft consolidation, then sellers would be pretty firmly in control. And I'd be thinking of a downdraft into maybe 53.75 to 53.80 area. This is a key level. Where you can see on the daily, we started a spring off of that area, actually a tested spring, and then the market started up from that. So that would be a key level. And then down below that would be 53.33. We saw that on the monthly and the weekly charts as a key level, okay? So those are the ideas that I have. I'm thinking that we're going to see some consolidation and maybe some attempt to rally up. There's some buying in here. We'll see how the market negotiates around 55.42. If it can get over the top of that, that tells us that, you know, the buyers are pressing or starting to press higher on the market. Maybe they've got some juice left and we'll see some higher prices. If they can't do that and we start, you know, trading back and forth in here and we start to get weaker and weaker, supply starts to come in, we break 54.33 here, then another back and then down lower towards 53.75, 53.80, and then potentially even lower than that to 53.33, the monthly support. So that's what I see this week. Now, just as a heads up, everyone, I'm getting my second eye surgery done this week. So we're not going to have deep practice on our normal day on Thursday. There'll be no deep practice because that's the day I'm getting the surgery done. But we'll do it in advance. We'll do it Monday night, the 29th at 8 o'clock, our usual time. So I'll see you Monday for deep practice at 8 o'clock Eastern time. And see you then. Have a good rest of the weekend, and I'll see you for deep practice. Bye-bye.